All right, guys, welcome to another live stream. Welcome to another live stream. Happy Sunday. Happy Sunday. All right, so in today's live stream, we'll go over a recap of what happened in the market this week. The main thing was basically the Federal Reserve meeting that happened on Wednesday. And, obviously we decided to keep rates steady, but it was more of that forward guidance that we needed to pay attention to, which really didn't seem that bullish. I do still think we're going to get another rate cut here in 2026, but it may be when the Fed chair gets replaced in May. And honestly, that is kind of still up in the air because they still have to. I don't know if it's like it has to be sworn. He has to be sworn in or nominated or something. I feel like he was already nominated. There was something about he needs to be sworn in or something like that to make it official. And Jerome Powell was saying he would do a temporary term, which means he would be there for another year before he gets replaced. So that's a potential that's on the table that Fed Powell is potentially going to be the Fed chair for another year. And if that's the case, we may not get rate cuts until the later half of 2026. And then again, there's still a chance that the new Fed chair, if he comes in, we're not going to get rate cuts immediately because remember, it is a board of 12. Although the lead, the Fed chair, has a big influence on the decision. There's still 12 people that need to vote in order to make it final. So it's not a set in stone thing that, okay, if you put a Fed chair in there that's pro rate cuts, that we're automatically going to get a rate cut. So yeah, so that's basically what happened. So let's just take a look here at this list of the recap. So number one, it has the Middle East war equals dominant macro driver. Oil spiked, inflation fears back. So it looks like oil went up again. And yeah, I was at the pump yesterday. I saw that gas was still, above $4 or around that $4 area. And then if you go up to the premium gas, it's a lot more, like 450, 470. So we're filling in at the pump. It says the Strait of Hormuz disruption in equal global supply shock. Yep, market price is higher for longer rates again. Okay. Risk off in stocks, but not full panic. S&P is down 5% from recent highs. NASDAQ nearing correction around 10%, and then 4 straight red weeks. So yeah, the stock market has been feeling it. The crypto market as well, but we are seeing a rally in the AI sector. Bitcoin right now is at 68,900, so it's really keeping that range from 68 to like 71,000. And we're seeing, since the NVIDIA did its GTC conference, we're seeing like a spike in AI projects and things like that. So I think if you are, in the AI space, you're probably not doing as bad. But overall, the markets are red for the week. And a lot of it has to do with the inflation fears, the oil, the war, and things like that. Okay, so liquidity rates, uncertainty, Fed not cutting anytime soon, maybe even hikes discussed. So this was a big thing too. So remember the last Fed meeting, it was, okay, we're either keeping rates steady or we're lowering rates. Powell said hiking rates is not even on the table, but it was told that this meeting rate hikes were discussed. Now, we're not saying Jerome Powell was the initiator of that, but within that 12 board member group, they discussed, rate hikes came up. So that kind of spooked the market and that kind of contributed to the fall in stocks because, again, nobody's expecting rate hikes this year. We were expecting more rate cuts and maybe just as much and keep rates steady for the most part, but nothing about rate hikes. So that kind of threw the market off. Stocks, what actually happened, Dow, S&P all down again. Small caps officially in correction. Weakness Tech sold off. Nvidia, Tesla broke key levels. Growth names under pressure. Rate sensitivity. Strength, energy stocks equals big winner. So oil surge, capital rotating in energy. Key takeaway, this is a classic macro rotation: growth, energy, commodities, cash positioning, rising. Yeah, this is usually where the opportunity presents itself. We're getting a lot of discounts across the crypto market and the stock market, and then in commodities as well. Well, no, the commodities are going up, but just the crypto and in the stock market. You're also seeing some stuff in real estate too. I'm seeing that a lot of houses are being cut. Like you'll go on CeeLo and you'll see, a lot of houses that were, priced at one price last week to get a $10,000-$20,000 cut, because a lot of these houses are staying on the market for 300 to 400 days, and the average, like a good time frame for a house to stand. Usually, a house stays on the market for 90 to 100 days, and then they get some buyer, and probably within that 100 to 130 day mark, the house is off the market if it's a good property and things like that. But now we're seeing good properties, even good properties, stay on the market for longer. So they're saying it's a buyer's market. Because you're able to get good prices. Now, obviously, the rates are not as low as it once was, but remember, we did get those 3 rate cuts, and it slightly lowered interest rates for mortgages. So, yeah. And again, we potentially 1 to 3 rate cuts this year, so that can also add to the fact that it's a buyer's market, right? Okay, so let's see here. Crypto showing relative strength versus equities. Now, BTC is not falling as much as like stocks, but it's still, range bounding. It's kind of hard for it to keep that 70K mark. But I really think the strength is being shown in these altcoins. We're seeing, again, this AI sector take off, and that intersection between AI and crypto, I think, works really well. So you're seeing a lot of those projects go up in price. Okay, regulation. Major three, crypto becoming banks, crypto firms acting like shadow banks, offering yield payments, custody without full regulation. Yeah, so this was a really is a good update or progress for the crypto space. Last week, the SEC basically said, okay, we're going to treat crypto like commodities, right? We're not putting it in the bucket of securities, and that's kind of the guidance we were waiting for a while. So a lot of people, if you look on Polymarket, the percentage for the Clarity Act for crypto was like bouncing up and down, but it's actually been pretty steady at 70%. I think it's because the SEC has finally come out and it's like, okay, we're going to give this guide, even though we don't have the regulation out yet, we're going to give this guidance for the crypto market so there's no ambiguity and people can, innovate and things like that. Because the whole purpose of, the Genius Act and the Clarity Act is for people or for crypto innovation to take place in the U.S. and, the U.S. not lose it to other countries because they're just, behind in regulation or implementing regulation. So that was very positive, and I think that's the reason why we've seen crypto actually hold up pretty strong. Usually, when you have these things like the Middle East tensions and things like that, crypto being so volatile, it's one of the first assets to fall. But now we're kind of seeing it, play as what it intended to be, a safe haven. Because we're getting more of that regulation, that clarity. Okay, so what matters going on? Altcoin setup. So right now, BTC dominates at 58%. So typically, when we get that crash below 58 or around 58% and lower, we start to see altcoins perform really nicely. So some suggest that we may be going into some type of altcoin season. Now, obviously, there's a lot of coins on the market, so it's not going to be every coin. But if you're positioned in the right coin, I think you could really benefit. So overall for this week, stock short-term shaky, macro-driven, crypto quietly strong. Oil, the entire market hinges on this. Next big move trigger, war de-escalation. And that's pretty much what you need to be paying attention to. What's going on with the war? Okay, so are we going to de-escalate? Are we going to send troops in? There was talks about sending troops in on ground. So, it's either we de-escalate or we send troops over there, and then, oil prices continue to surge and we continue to just get this uncertainty. So I think that's what you need to be paying attention to as far as the market, and just keeping an eye on that. And also, anything to do with the Fed. Obviously, we're coming into April here pretty soon, so we're going to get new economic data, CPI data, PPI data, jobs numbers. So those are things to pay attention to as well. All right, so that's an update for the market this week. Pretty much, the same as last week, just the Fed meeting that we got on Wednesday, and then the obviously the forward guidance that came out of that. Okay, so let's play some chess. Currently, I'm at 1352. I'm really trying to get back over 1400. I was over 1400 for like a brief minute, and I want to get over that. My goal this year is to be over 1500 in Blitz. So let's start this. All right. It's funny too because I feel like I already played almost like every position. It's just remembering what's the optimal move in every position. All right. Oh, he blundered that. Blunder that. Quick W. Quick W. Hmm. know, buddy. That's check. Well, it's not checkmate, but he gets a free piece. And then he'll do that down. So I wonder. Huh. If I do that. Mm, 48 seconds. Yeah, I'm gonna have to do this. Yep. Okay. Let's do that. Oh no. My goodness. I don't know why I did that. I was not supposed to do any of that. I don't know why I'm playing this out. Pretty much lost this game. All right. So he wants a rematch. Can't believe I lost that. Playing too slow. Too slow. Wow. I think that's checkmate. I don't think he could do anything. I think that's checkmate. Wow. He got greedy. That's what happens when you get greedy. Yeah, look at that. He's resigning. They always do that. They like get off the thing. They disconnect so that way they don't have to lose. That's so funny. Okay. What time is it? I think I'll play. I think that's pretty much it. I'll end off on a W. All right, guys. Yeah, so that's pretty much what happened this week. We got the Fed chair meeting. We got some forward guidance from the Fed chair. And again, it doesn't look like we're getting rate cuts anytime soon. We have the Iran war and that stuff still going on. So we're really just looking for updates on that so we could see, so the market could decide where it wants to go. And then, I think Q2 will probably see what happens with interest rate cuts, whether we get one or whether we kind of trend back towards, getting on that cutting schedule. But more to come on that. We just need to figure out what's going on with the geopolitics and take it from there. But that's pretty much it. I'll see you guys in the next one. Take care.